Hi, I'm Geoff Atkins, Managing Partner of Strategic Minerals Group, consultancy company which is applying all the lessons that the group have learnt over the last 15 years in the rare earth industry to be able to provide advice to rare earth and other critical minerals industries to transition from development through to operations.
My goodness, wouldn't that be a nice thing? The company's actually getting into production.
I know, it's a horrible thought, isn't it?
Well, look, we're here in Barcelona, hence the backdrop.
Yes.
There's what is that over there? The familia is over there. Yeah, we've got everything. So, but what's happening downstairs is a meeting of minds. Now, not necessarily a huge conference, but a very concentrated one of the rare earth companies globally come together. How's it going down there?
It's actually really good.
Yeah.
The thing which makes a big difference is there's a huge cross-section of attendees.
Yep.
So it's unlike other conferences where it's dominated by junior miners, explorers, that type of thing. The thing I've found very good is there's a mix of everything, all the way from feedstock suppliers right through to the OEMs.
Right. Okay. And I guess the thing that slightly fascinates me about this, last year was tiny, right?
Yep.
There's been a real move afoot. We've seen critical minerals lists, rare earths being thrown in there amongst that. And we've been talking for the past year or so with your previous company, and obviously with the context of what's happening in the rare earth space. Now, there's not too many players.
No.
We need all of them to work.
Yeah.
Not all of them will. So that's
very
the problem,
true,
right?
Yes.
So what are people here to do? Are they trying to sort of work out who's who at the zoo? Is it look at supply chains? What do they actually want to get out of this?
I think it's a bit of everything. I think it's a little bit of a case of what does actually the supply chain look like? And there's not too much around, as I say, because there's such a huge cross-section of attendees here, it's not focused on, for example, from a mining perspective, what do we need to do? There's not even that much of, here's an update of this project. It really is a conversation in general around what actually is the supply chain and what's important to it. I mean, the critical message has really been about the sustainability,
right,
and ESG provisions through the supply chain.
Okay.
And that's been the really strong message.
Who's driving that? Obviously, downstairs we've got OEMs.
Yep.
Got a bit of government in there.
Not a lot of government. That's probably the one thing which is
missing.
A bit light on.
Okay. And we've got industry players in there. Some speeches being made, some panels being had, and their message to miners is clearly ESG. What else are they looking for? Certainty, right. Over what price, presumably?
Certainty on price, certainty on supply.
Okay.
So, and the ESG component is really being driven a lot by the OEMs. Mm-hmm. It is, there's traceability through the supply chain. It is, we're producing these products for, the green economy. So we need to make sure that the elements of the supply which go into that are produced as sustainably as possible.
Okay. I went straight to price because price is an important thing, because the OEMs, the battery, the OEMs, what they need is not just certainty of supply, but they also need this kind of steadiness to the price. Because the one thing certainly I experienced in banking kind of kept us away from the rare earth space was this erratic nature of pricing. One minute all is good and the future looks great. The next, it's what the heck just happened? So for the OEMs, that stability, because they need to pass that cost on to their customers or lose it.
Well, exactly. And it comes down to what's your definition of sustainable,
mm-hmm.
of sustainability of a supply chain. I mean, I know the common one is it's environmental sustainability. Well, to be honest, mining by definition is not environmentally sustainable because
mm-hmm.
you are removing something from
yep.
the earth. But sustainability of a supply chain is something which is able to be relied on for the long term. And that's really what drives it all. So that comes from the responsible mining, responsible processing, environmental controls. It comes from community consultation. It comes from also sustainable pricing.
Right.
And exactly as what you suggest, if you have a product which has variability in pricing, which might be up to 200% swings within a 6-month period, that's not a sustainable pricing model. So, for an OEM, if you've got a key component which has that level of variability, well, you need to, you can't operate that way. And for a car manufacturer, for example, where if you're looking at rare earths going into a motor and you've got a 5-year product life or a 6-year product life cycle for that vehicle, you can't afford to carry that level of fluctuation in a key component. Even if it only ends up being a relatively small price at the end, you still can't carry that variability.
Yeah, and the converse discussion that about is with the miners. They kind of need certainty. What they actually need is bankability.
Exactly.
And no bank is going to do anything with price fluctuating violently as that. What they want is contracts which they can use for that bankability.
Exactly. And if you look at the history of rare earth mining, very, very few companies actually transition from development into operations.
Mm.
And the key question is, why is that? And it's really about how do you have that study and make it bankable? And one of the key issues there is the fact that the pricing model is completely, there's no transparency around it.
Mm.
And with the variability there, what price do you possibly put on it? So how can you possibly get debt finance to actually fund that project? So the key is really around finding a model which suits your feedstock suppliers,
Mm-hmm.
gives them the certainty, gives them that bankability around your offtake partners, and then also for your end users, gives them the certainty around the level of supply.
Right. So basically there's a conversation to be, and I guess that's what sessions like this are about, where both sides need to it's going to be a little bit of give and take required to kind of end up in the right place.
Exactly.
Or else the supply chain, quite frankly, will pretty much stay fixed and attached to China.
Absolutely. And it's not like this is a new concept. I mean, if you look at the gold industry, for example, there's been gold hedging for years where miners come in, they hedge a percentage of their production at a fixed price. It's accepted that you might lose some, like you'll leave some value on the table, and that's an accepted process. So I think the key is for rare earth miners to also accept that and say that to get bankability, to obtain finance, you might need to actually lock in some of that pricing and to ensure that that's what you have to produce to develop your project.
Right, and just sort of sticking, well, we're kind of, I don't necessarily want to conflate these two discussions, but the financing component seems inextricably linked to ESG, which you talked about at the beginning. Now, the US is, I get, kind of floating on ESG. It started hot and heavy, funds got in there thick. Now I think it's got a little bit looser, a little bit grayer, and maybe a little less obvious as to what the policies are there. Europe, however, seems really taking it seriously, and that's good for financing.
Absolutely. And I think, well, what I find interesting is a lot of the funds, the ESG funds, are coming out of North America.
Yeah.
So the investment dollars are putting a lot of importance on it. But industry probably isn't, it is not as front and center for your OEMs, for example, as going through that supply chain at this point in time compared to the OEMs who are located over here in Europe.
Interesting. And I guess we can't talk about rare earths without mentioning China, can we?
Absolutely not.
But again, and it's this sort of the language coming out of North America versus the language coming out of Europe. Again, it seems less combative in Europe.
Absolutely.
Does that necessarily mean it's in favor of partnering in some way with China, or do they want to be able to manage their own supply chains and control that?
It's about sustainability of the supply chain.
Okay.
So we get back to this term sustainability.
So it's not anti-China is what we're saying?
Oh, God, no. No, what it is, it's about saying for any business, if you're reliant on a single source of supply, you have an inherent risk there. And this is something which really came to the forefront over the last few years, where not only through COVID, but also when you look at what's happened with the superconductors and things like that, where if you're obtaining all of your critical supply of a component from a single jurisdiction, you inherently have a risk. So there is this real push and this desire to diversify that supply. And likewise, it's also important to have a level of that supply coming from locations close to your manufacturing facilities. And that's typically what's always happened in just-in-time manufacturing for car manufacturers.
Yeah.
And so it's really just going back to what's been there before, where manufacturers are saying, okay, we need to have a percentage of these critical minerals
Absolutely. So they're all just-in-time mentality and building up of inventory. One was a kind of cost-saving efficiency thing, which is great when the world's working perfectly and efficiently. Trouble is, we've seen the last 3 years huge disturbance to that. So I can see it moving back towards that. The other thing they're going to have to do to generate that certainty, certainly the OEMs, is work with companies who are going to be able to deliver what they say they're going to be able to deliver. Now, this is your sweet spot.
Yeah.
We need to move away from talking about producing and actually getting into production. Now, there's a range of companies downstairs, some further ahead than others, and others who will need, let's say, a bit of help.
Yeah.
Right? So how do you see the landscape there for OEMs looking to companies who can actually get over the line?
The big question is qualification. So how do you qualify your product? And that is the key thing, because there's no point saying we're going to produce 5,000 tonnes a year of NdPr, for example, or 2,000 tonnes of NdPr tomorrow. If you haven't qualified your product, no OEM is going to replace their existing suppliers with that volume of product. They'll start, might be 5%, 10% maybe, till you demonstrate that you're able to produce that product. And until you do that, then offtake is a big problem. And particularly when you add in that for rare earths, commencing an operation and ramp up and producing product at spec typically takes a number of years to actually achieve. And the history of rare earths production is littered with companies not able to produce product at specification. So the number one question that I'd ask any, and I do ask any budding rare earth developer who's looking to get into operations is, how are you going to prove that you're actually going to be able to qualify that product?
Right.
Now, I use a perfect example. I'm doing some work at the moment with Ucore Rare Metals. So they're building a separation facility in the US. And so the commercial facility is going to be built in Louisiana. But what they're currently doing is building a demonstration facility, or they've built a demonstration facility in Ontario, feeding product in there. It's much bigger than a pilot plant. And the product coming out of that is going to be used for qualification so that they can go through that qualification phase whilst building up the facility in Louisiana.
Right.
So it means that when product starts coming out of Louisiana, it's qualified, it's able to go directly into the supply chain.
Right. But they've ticked off quite a few boxes out there. A couple of things we talked about was obviously getting there technically, but also being able to finance pilot plants, demonstration plants, and then ultimately, hopefully, with the contracts in place, get the production plant in production. Which was the key to this.
Well, going back on that one from a financeability and a bankability perspective, if you're qualified as a supplier into the rare earth supply chain, well, that opens up an enormous range of finance options.
Diligence done.
Well, exactly. And then, so things like debt finance and everything else. So from a dilutionary perspective, it makes it a lot easier. So shareholders, that's a huge, huge benefit. Yeah. And so if you then want to expand your production, you've got this access of much cheaper finance.
So, and there's the other thing we've done, which is, I guess, why your business exists, which is there's not too many people have done this ex-China, outside of China, right? And like I say, this is not an anti-China thing at all. This is sort your own supply chains out and make it a competitive environment, is what everyone's trying to do, which is the skills necessary, because it's a very, very technical space you've got here, right? These rare earths are hard to extract, and hard to extract economically, which is the key.
Yeah. Yes.
Where's the skill set going to come from?
Well, that's actually one of the big topics of conversation downstairs is about where are the skill sets going to come from. And I look at the people downstairs, and it's quite interesting actually. We've got the team here from Caresta who have extensive experience in developing solvent extraction circuits. You've got a number of other ex-colleagues from Linus who have come.
Where you were?
I was. My team are. But then for companies like, Serra Verde, Eric Noares, he's, coming through there. But it's interesting that the people downstairs who've actually gone through this process before and recognise the challenges of producing rare earths at specification. The consistent theme is they've all come from the same company 15 years ago.
Right. Been there, done it.
Been there, done it. And now rolling out their second projects, or third projects or something like that. And that level of experience and that level of understanding actually drives how you put a project together. Because it's saying, okay, we know that we're going to have these struggles during commissioning. So we know that the project has to be designed around that, and it has to be funded around that. And that's one of the big things, which is clear when you look at the plans of some projects, where it's that there's not the recognition that, you know, if you have a $500 million project, for example, or a $500 million capex or $1 billion capex, well, you actually need $1 to $2 billion in financing, because you're going to have to pay for 2 years of working capital. You need to pay for inventory. You need to pay for all of that sort of thing before you produce product to specification and achieve revenue. It's
an interesting point, actually, because I was actually going to move on to it in terms of government how, because we've seen this in the battery space, where I think that whole ecosystem is looking to government, and I think it seems to be delivering in terms of, you know, tax credits or available funding in debt funding, and even a little bit of equity in places. And there's lots of sort of ways you can sort of get at it. Mostly seems to be going to industry at the moment, but I think hopefully it filters down into the miner, upstream to the miners. With rare earths, I think we saw there's a sort of UK company with a project in Angola, and I think they're trying to get a plant up and running in the northeast somewhere. I think they put a lot of press out around the cost that they thought might be appropriate for that. Which perhaps didn't take into account what you just said. That there's a bit more to it than that. You know, and I'm not, you know, having a go at them. I'm just saying it's difficult. It's technical. It's new. It's a lot of money, and trying to operate, you know, mines and the technical services side of things. It's difficult, and that's I think that's the inherent problem. So when I'm hearing and listening and researching about some of the groups downstairs, it seems to me not everyone is clear as to what the road or the path ahead looks like.
Well, and especially if you're looking at a project where your capital requirement is actually more than what your market cap is.
Yeah, it doesn't. It's, as an ex-banker, that's not an easy conversation to have with them.
Exactly, and you know, then if you're looking at something at that scale where if something goes wrong, and expect something to go wrong, how are you going to fund that? At that point in time, the way that we refer to it is that's a company killer.
Well, it can be, because you've sent the wrong message out to market. It says, I don't quite know what I'm doing.
Well, it's
right?
Exactly, but it's not only that. It's saying we've built this plant, we've got this problem, but we need to now raise enough money, which is basically 30, 40, 50% of our market cap. And that's not an easy
and that won't be the end of it either.
Exactly. So it's a bit different to saying, okay, yes, we've gone over budget, or we've had an issue where we need to do some rectification works. We need to raise 5%. We need to raise money, which is 5% of our market cap, which is a much easier.
And I think in other sectors, we've kind of seen this at the moment. It's not just a rare earth thing; it's all companies thing. Where there's a kind of window where inflation could be blamed. You know, the economic study says it's 50%, 100% more because inflation. It's more than that in certain cases. Because, and it does come back to the skill set, being there, done it before. You know, that whole know-how thing, because it's not easy. It's not easy.
Look. And take the last couple of years out of it, because that was a force majeure event for contracts. That was something where no contracts, doesn't matter if you signed a fixed term contract, nobody's sticking to it. You know, steel prices were valid for a week. So forget about
diesel.
That. Exactly. So forget about that for a period in terms. That's not normal. It's really about saying, okay, we've got this project, even assuming that you deliver it on time, on budget from a construction side of things, because the process itself is inherently complex with 2, 3, maybe 4 completely separate processes, each one having their own risks, but with complexity increasing at every point along the supply chain, through to separated oxides, for example. That inherently will create challenges. And there will be problems which will occur, and something will go wrong. and it will take a significant amount of time to ramp it up. I mean, it's not like a gold project, for example, where the process is known, you have a high level of confidence in terms of what you can deliver. The specifications can be, don't have to be as strict.
Yeah.
When you're talking about having to produce products at 3 nines or 4 nines on day one to get any sort of price.
Yeah.
Well, as a starting operation, that's pretty tricky.
Yeah.
And you're not going to hit that on day one.
No, I see. There's a whole world of hurt and pain. And the way we're coming at it is obviously as investors.
Yep.
I want to look to the companies and say, right, management team, experienced, done it, got a reasonable business plan, i.e. they've thought through all the variables and how the market's going to affect that. It's a nascent sector, so that supply chain and working out who you're partnering with, where your offtakes are coming from, the quality of the money that you're getting, not just the money, the quality of the money, okay, but it's the who. As well is really important, and obviously, how do they insert themselves into that financial ecosystem to get funded for the entire project, not just the debt bit, and then the product. Have they got the contracts which can get a hedged? Quite frankly, I want the comfort, de-risked nature of a hedged contract in place. So there's lots of things for us as investors to look at. Hopefully, we can go on a little journey with you. To sort of maybe point at the good and point at the not so good, or point at the things that maybe need a little bit more help than others.
Yeah.
And your job, your company is helping companies actually get into production. So
that's exactly
it, right?
It's
there aren't
that.
Are you going to get the T-shirt? Been there, done it.
Oh, we'll see what we can do.
I'll take one if you're printing. But look, we'll maybe talk about that another time when you come back from your travels around Europe. But anything else you think we need to be aware of in terms of what you're hearing downstairs about the rare earth space?
Look, I think it's what I'm hearing downstairs is actually very positive.
Right.
It's a much greater level of understanding of what's required to be successful and to actually bring products into market, deliver them to the end users.
Yeah.
And I think the most encouraging thing which I heard was from a number of OEMs through their presentations and through private conversations around the fact that they're looking for sustainability. And it's that the entire market needs to be driven by the OEMs fundamentally. And that's what the big positive I saw from downstairs is I can see that really starting to happen. And once that happens, the rest of the industry will follow.
Geoff, good to see you, man.
Likewise.
Good to see you.